learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in on March 2nd, 2020, and tomorrow is going to be crazy. Everybody was already saying this over the weekend. Kramer, CNBC, Forbes, the news sites. We were talking about this. It's probably going to be Black Monday, and I want to talk about exactly what that means, Black Monday. However, this situation that we're dealing with is going to be very, very unique. It is very difficult for me to even say that we are going to get a gap down after seeing such a large drop day after day after day. However, this situation is developing, and it has over the weekend. It has to do with the virus and even stuff I'm seeing now, both locally and abroad. People are starting to trip out now, and it's kind of settling in. So that being said, would I tell you guys, don't trip out, don't panic, be smart, be wise, like the stream insurance, baby. It's better to have it and not need it than need it and not have it. But what I'm trying to say is don't let this affect the trading too much and what you guys are going to be doing. Same thing exists with the long-term chair. I am going to be getting ready to buy a bunch of long-term stocks this month. However, we have to see what's happening. And finally, we have you covered here at the call. I'm not saying this as a gimmick, anything, whatever it may be. I feel like my job and duty is to give you guys the best information possible, especially as it's happening. If you are scared, if the market's going crazy, whatever it may be, tune in. We are live Monday through Friday, 30 minutes before open. It's the first link in the description and is pinned in the comments. You could come watch live every single minute of the day. If something's happened, both plays to profit off this, to hedge your portfolio, to play the bounce, all of that, we are going to be live. And I will say this for everybody, man. I don't care the reasoning if people are getting prepared for stuff, if people say it's no worry, it's just the flu, it's not a flu, I'm a day trader, technical, this, that, I don't care, man. Now is the time for unity, man. We love you all. All I want is peace out here. So that's what I'm saying. You come on here, come on the stream. We got you guys covered. We will be sharing it with you. You could see how I'm positioning and moving. And overall, this is history in the making. So I said this a lot on Friday. Take this all in. It's going to be very, very few times in your life that you will actually get the opportunity to witness exactly what's happening. So I have the keys for you. I want to talk about what to look for. I'm going to talk about some of the plays that we made on Friday, some of the profits that we took, but now the exact strategy coming into tomorrow. I have a few different plays, and this is where I need you guys to come in. I tell you guys, post your watch list below. We need to source that information. So post them and let me know. We need to go after the laggers. I'll show you the plays that we made. We opened positions on Friday. We also closed some on Friday. So I'm going to go over that, and then I'm going to see you guys in the morning. I hope you're ready. So like I already said, drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We are going to be open from morning till close. You better be there. It costs nothing. Although we have the freemium stream alerts, which is not trade alerts, it lets you know what's happening on stream. I am even considering suspending any new signups on that to show you guys that we are serious. This is all free and we want you there. You don't have to sign up to be in the chat. Just please be respectful and shout out for our mods, baby, holding it down. But tomorrow is going to be crazy, my friends. So this is what's going to happen. Tomorrow's going to be crazy. Watch the first 2 hours and the last 2 hours. That is going to be the timing. Now, it is probably going to be Black Monday. Some of you are like, what is Black Monday? Well, what happened in October 1987? The Dow Jones lost 22% in a single day. This marked the beginning of a global stock market decline and became one of the most notorious days in financial history. By the end of the month, most major exchanges dropped more than 20%. So the cause of the massive drop cannot be attributed to a single event. It was several events coalesced to create, I don't know if that's the right word, to create an atmosphere of panic among investors. For example, the trade deficit of the United States. Isn't that funny? Talked about that on Friday and how markets used to respond to that. Computerized trading and all that. Essentially, the SEC built a bunch of mechanisms to stop and prevent panic selling. That's what happened. And that's what I'm saying here is because even locally, I've been seeing, I don't know, correct me if you guys are wrong. Go on Amazon. You can't even get sanitizer out of stock. There's no more Prime on certain objects. I thought that was funny. Kind of disappointed me. I was really sad. But a lot more people are kind of picking up. You saw a lot of different things over the weekend, but now the question is, how does this relate to tomorrow? And now what do people start doing with their investments? But tomorrow is going to be a very interesting day because this is a different type of Black Monday in the sense that the fact that we sold off 5 days in a row all throughout the week and at such a large scale, this is why coming into Monday now, and people, and especially the developments, people aren't going to be too excited. However, now, I don't think it's going to be the scale of 20%. That's not what I'm saying at all. But what I am saying is that now, tomorrow, we have to gauge the panic level among investors. That's what I'm looking for. So that's why I'm saying we're not panicking. I'm not panicking. Hopefully you're not. But what we are looking for is to see, does a panic set in and how does that play out? That is going to be the most important thing. So even when you go and look into it, a lot of things about Black Monday, it pretty much has to do with panic. Now, another thing is Rule 48. And now, if you guys have heard me talk about this last time in August 2015, that's when I turned $2,000 into $250,000. It was kind of a similar situation like this, but they put in this rule to suspend the daily requirement related to stock prices before open, but they got rid of this rule, and now what they did was they changed it with a bunch of other stuff. So essentially now what I'm going to say is watch the futures. I don't think they're open right now. Oil dropped to 43 a little bit and bounced. S&P is down 1% right now, and the Dow Jones is down 300. So it's not that bad. So it's probably even a little better than a lot of people expected. And this is what I was going to say. The only time you could really start to observe panic, keep this level in mind, 5%. This is what the SEC and the people running the New York Stock Exchange, this is what they got here. It's 5% and 7%. If you don't see big moves on that, I wouldn't get too quick to act. And that's the same thing. This is why I'm saying this is a lot different than any sort of Black Monday situation. The only bad thing that makes this even comparable is the fact that you're getting an extreme sell-off, extreme sort of panic or cautiousness over the weekend with negative developing situations. It is how does the market react? That's why I'm saying tomorrow morning is going to be crazy. So what we need to be looking out for is if there's going to be a 5% drop, and that is what's going to happen again in the first 2 hours, or the market's going to go crazy in the first couple hours, make a move, and then where does it end up at the end of the day? So now this is the next key to watch for. Get ready for kitchen sinks. Jerome issued an unannounced statement on Friday. So this is what sparked the end of the day kind of melt up here, or even a panic buy. But we saw Jerome Powell came out. First, it was Jerome Powell. He said the Fed is ready to do whatever it takes. And don't forget about this, you guys. We've been bringing this up the whole time. Remember, market was pricing in no rate cut, then a 1/4 point rate cut. Now they're saying it's guaranteed. They're pricing in a full 1/2 point instead of a 1/4 point. Remember how important this was, and I told you guys, you got that in 2 weeks. So it's interesting to see now by the time the Fed comes out and how the market develops, it's going to be a game of chicken. So that's why expect Jerome to say stuff. He said they're ready to move. That brought the markets up. Then Kudlow, or then I believe Mnuchin, they said it's a good time to buy stocks. And then Bank of America, and this was all within a 3-minute period before close, they said there's a 100% chance of a 1/2 point cut. So the markets came up on that, but I said that wasn't really throwing the kitchen sink like China. I said that was the mini fridge. But watch out to hear if there is any sort of statements. Again, the fact that Jerome issued an unannounced statement, that's one thing. The next level would be an emergency rate cut. However, I don't think they would. I think they're, and this is what I'm saying, it's good. Things are going to move a little bit weird here, because I think it makes more sense for them to ease the panic by not doing an emergency cut and seeing if the market could just hold up for the next 2 weeks, which could get a little bit weary here. But that is the main thing I'm looking for. Get ready to hear from Powell again and what the Fed says and how the market reacts to the Fed. Anything positive or anything announcing stability, stabilization. You saw that with China. Don't put your tinfoil hat and say, oh, no, that means it's bad. No. Markets and investors and big money like support and stability. So if you got the government and people in the background saying, yeah, we're going to prop this up, that is a bullish sign, and that is not going to be good if you're holding puts. So get ready for him. Get ready for Munch and Mr. Mnuchin. I'm excited there. And then now the bounce, when it does happen, is going to be massive. I will tell you guys that, because the minute this is going to change, like I've been saying, this is slow absorb move. That's still the case. And that's why tomorrow could be really, really bad, or tomorrow could be kind of this weird, effect like after we saw the first Wuhan zone. So keep that in mind. Even though we're in this own zone, it's just going to reflect this at a bigger scale. I could almost guarantee that, but I don't know if it's going to be instant day by day. So again, since it's a bigger scale, we don't know if it's going to move faster or slower, but something in this realm of big drop, bounce up a little bit, chill out for a few days, maybe a few weeks, and then come back up and then maybe come back down. But what I am trying to tell you guys, when the bounce happens, it is going to be massive. However, this whole bounce and drop for 1 week that I've been looking for, that may be out of the picture, but we still got calls on Friday. This is what I will tell you guys. Don't get too bearish, but ride the wave down. It is a massive opportunity. However, do not be afraid to let go of puts and takes profits. I'm going to explain the strategy to you. As you guys have of seeing us do. We're taking advantage of plays in the morning. Every single day of last week, I cut profits and added a new play in the morning every single time. So if you guys have been watching, you saw that. I was able to profit off of the plays that we had, and even in the midst of drop, I was getting a brand new play every single morning. There's going to be rotations. There's going to be laggers and leaders. So take advantage of that. Do not be afraid to let go. Do not think that, and that's why I'm reminding you guys the bounce is going to be massive, and you guys saw how quickly the market could panic bid, and I even remember some people, this is where I need you guys. You got to keep your head on. So many people are like, oh man, I knew I should have sold my puts, and then they see the news over the weekend, and things come down, and then they go back to, oh man, I kind of wish I kept those puts. You got to be a robot. You got to be systematic. Even if you're not a robot, be systematic. You guys saw what we've been doing. Like I've been saying, it's a system. I've been riding the wave on some, riding the safer stuff, cutting out anything high probability that expires too soon, holding the ones with time, playing certain industries, going after laggers or leaders, taking advantage of the premiums in the morning, taking advantage of stuff at close, taking profits all along the way. Keep it systematic, my friends. So as far as the strategy now, I can't spell right there, obviously. Take advantage of the mornings and the lack of liquidity. This is breaking the computers. I mean, I said this yesterday or Thursday, and I noticed it after we did that one play. I think it was the Johnson & Johnson's. They instantly went up, and they did that because for the first 10 minutes, there was zero volume on the option chain. A lot of people are even discussing now the lack of liquidity in the market, and that it could paint a different picture here for the next 2 weeks. However, it's not as if people are always shorting the market right now. It does not mean people are really active. People are kind of watching and waiting, and this is creating something unique for the options, especially imagine the people who aren't as familiar with options or are scared or whatever it may be. A lot of option chains are surprisingly illiquid. So this is creating an opportunity with the prices. So I'm going to be looking to finesse that, but it's happening in the mornings, and then it's happening also at the end of the day. But specifically, we're going to look in the morning. So be there. That first 2 hours will be important, but now especially that first 10 to 30 minutes. So have plays lined up that you want. And again, reverse pyramid, scaling small, scaling a little bigger. And then after you get to see that first 2 hours, see where the prices are, then you could put the big boy in there. And also make sure you still have money, because it's not just scaling in for one day. These are multiple swings, and I'm getting time. Mostly any new positions I'm picking up are going to have at least April. I will tell you now, by the end of this week, I might just start going for only May's, but the shorter term contracts are going to offer the opportunities to gamble a little bit and get higher risk to reward positions. Keyword, risk to reward. You're going to take higher risk. You'll spend $50 on something that could expire in a day. It's going to whipsaw you. If you're not emotionally solid and don't have the armor on and can stand there, you will get beat up. And then if it expires, you're going to be pissed off. However, those are the same plays that could go $10, $20 in the money and be crazy. So we're going to be balancing them out there. However, I want to stretch my dollar, and I'm aiming for more April, May's, if anything. Next, as far as everything I'm holding, I'm going to be riding those cheap SPY plays. You remember the old Tasty account. I haven't been using them as much because that one Apple play went against us. However, that play started a reverse. But remember these SPY plays. I told you guys this. They dropped to 1,500%, but by the morning they should be up. At one point, these were every $70 turned into $2,000. So you could have had $25 and turned it into $800 or $1,000. But this one, the IWM, I'm going to ride these cheap SPY plays because they have a little bit of time, and these are still offering $30,000 and $20,000 max rewards. And I've been taking and ghetto spreading everything else, but I'm going to be riding those all the way down. And then I'm going to pretty much be flipping and selling everything in between. As stuff gets more profit, I will take a little bit of profit or ghetto spread them, but pretty much I'm going to be balancing my budget, baby. So I'm going to be trying to find something to scoop up in the morning. After I scoop up something, those are going to be higher risk because we bought them that morning. They're already going to have a premium. Hopefully we get them cheaper, but I'm going to, if I get one of those, that means I'm going to sell an older position that's already up 1,000%, 700% or so, and then rinse and repeat while riding all of these, as well as now TLT. It hasn't had its breakout moment yet. Does that mean you buy it? No, there's still going to be a capitulation. However, I have those April 170 TLTs. I've not touched them, and I'm not going to touch them because given the news with rate cuts, what the market's pricing, Powell, all that, it has yet to really break out and we saw them even lag prior when everything was happening with the market. When the market was really, really dropping, TLT didn't go up much, so now it's going to start catching up there. But remember, this is moving for a different reason. So TLT will be good. However, why I'm telling you this is to keep your eye on it, because now if there is an opportunity or we see some laggers or TLT starts to capitulate, and I do believe it is going to drop big or stall out before its next pop up, that is going to be when we want to get into it. And then finally, man, make things free, and ride the wave. That's it. You could always take these risks. That's what I've been doing. I've been throwing bigger risks. If the volatility makes it go up and we're getting it in our favor, it's not hurting you to make things free. At this point, any profits, anything I'm holding, I've made it free 3-4 times over by just buying it, ghetto spreading it, buying, selling, getting my initial investment back, and then playing with the profits at that point. So I'm sitting on I think I have up to like $100,000 in potential profit on plays that have no initial investment now. So you could set yourself up nice, take advantage of the opportunities, don't get too greedy, and then finally go for the laggers. This has to do with the plays that I want to make now. So let us get into the plays. Right off the bat, this was one of the plays we made in the morning. We got a 3M. And again, this was the logic, even though they dropped a little bit and, you know, they are operating in a unique fashion. You could see, compare that to the daily on the S&P. You know, the S&P was at tops. They're breaking now, coming down to, you know, October levels. The difference is for the last year on 3M, they've been getting clobbered regardless. So you see why they're moving, and you will see this commonly happen because it happened with the travel stocks the other day. When stuff gets sold out, it doesn't mean they have to automatically go to zero. Once they reach a low enough point, it really is going to take a lot to set them there because they have a certain level of intrinsic value that the market is liking. So it's not necessarily going to just sell off before there. So that's what offered a unique proposition with 3M, but they got upgraded the days before and they were running up into this big decline. That is a lagger. I wanted something that was gaining while the market was going down to hopefully get cheaper contracts. So we got these and we did the same strategy there in the morning. We got the 3M Aprils, but what I mean, the strategy in the morning were cheap. We got them within 10 minutes, 5 minutes of the open. The premium didn't really settle in too much yet. So we got these 105 puts. Again, these are tier 3 standard deviations out there, a little further out there, but we got them within 20 minutes of the market opening. I got 10 of these. I spent $300. For 10 of these, you could see it went up, but notice what happened here. Every contract above and below it did the same thing from that same time frame, and it did what I was saying. There was no liquidity. So that first 20 minutes is surprisingly dead. With no liquidity, no options, transactions, it's making it very difficult, especially with how much the market's been moving. Imagine what that's doing for statistics in Black-Scholes. The computers don't really know what to do as much, or there's going to be a bigger margin of error. So we got some of these. Is it too late to get in? Yes, we're sitting on them up 140%. And now you could see, you know, when we got them, I did the same strategy. And this is what I've been telling you. Look at the few days before. Look at when it dropped. What was the price? You know, from last week, it was a 300% increase. But the day before and 2 days before that, it was only about, like we said, 100, 200% increase. I don't like 200%, but comparing the day before, 15, we got them at 30. I liked it. So we got those. And then the next one, I was a little late for this one. This one is a little hard to get hit on, but this is the whole concept with the laggers. If you watch the watch list on Thursday, I specifically brought this up. This is what I was talking about. CLX, Clorox, they were going up while the market was dropping. This is a lagger, and this is the importance of how we're analyzing everything here, is that saying that as certain things shift, as panic starts to kind of spread, people get a little bit worried here. Again, the Fed may have to step in, whatever. It's going to get to a point where what happened with China, they had a slowdown in economics, and now people are starting to weigh if the U.S. supply chains got disrupted. That is why I'm going after this. Pretty much there's levels now where something bad happens. It could hit the broader market, it hits certain industries. Then other companies start to just get hit because of that. And then at the same time, some companies start doing good, but then it's going to hit that level 3, level 4, where it doesn't matter now that you're seeing just broader sell-offs across the board, even globally. So that's why I was going after this. You know, like I said, go on Amazon, you can't even buy Clorox wipes. They're all out of stock. It's kind of wild, but this is what people are saying. Well, that's good for business. It's going to bring it up. Not necessarily, because they may sell out of whatever they have, but if there is a supply chain disruption, they won't be able to make more. That's going to hurt them. But now people's expectations are higher. These could get clapped. So we got this play. I went in small because I was a little late to the party, and they ended up closing 60% up. But April 17th, Clorox 130. So I might want to come back, not on these, but another part. But I got them at 55 cents. Again, the days before they were trading at 13 cents. So that's why I was like, damn, it's a little bit of a premium, and that's because the spread. So they dropped a lot. I still like them, but we could watch everything else up and down the chain. But I'm going to see. But that one, as we definitely just got in late. I mean, that's the best way to put it. It wasn't getting filled as good, so I was like, it's getting a little difficult, and the spreads were large. And granted, Clorox did drop, you know, even after that little run-up, they dropped 5%. They pretty much caught up to the whole entire market almost in one day. It was pretty ugly. So there was that. As far as everything else, too, I did sell my BABA puts, my Baidu puts, anything that I bought the day before that was only up 100, 200%, I got rid of those because I opened new positions, opened more exposure. And those, if they didn't appreciate a lot after yesterday's move, that was kind of worrying me. And I was figuring, well, that means they're so far the money and the premiums were high, even if the market was dropping, they were not gaining the said value that they should have been. So we did that. And then finally, even at the end of close, I did a YOLO SPY play. We hit 4,000 likes on the stream. I was like, that's crazy. I was like, well, I'll do a YOLO put. But then I was like, shout out Babinski. You guys are like, nah, not doing it. I didn't really want to. I wasn't even feeling it. However, I found a way to justify it with what I wanted. And like I'm saying, I've been expecting the bounce. I don't want to get caught without any long-term plays. And this is the key with playing a bounce on the upside. Calls are usually easy to profit on, much more than puts, but the thing that's going to kill you will be time. So I made sure I got May. If anything, I want more time because when it bounces and then stalls out a little bit, even if the market goes up but too much time gets killed, that's what will kill the call plays. But I bought SPY May 15th, 343 calls all the way back here. I grabbed 30 of them at 33 cents. I spent $990. Even after that, that's the thing that's funny is that even as the market started to melt up, they went up to 41%, which was, a 30% increase. However, you would think with the market moving 3-4 points, they would have went up. And this is what I was trying to tell you guys. So wait and watch that. But that is my first scale in on a bounce play. I put $1,000 in there, and that's because we're sitting up over $25,000, $30,000 on put plays and positions as such. So that's why I was like, all right, I could throw a bigger position here. And I do want more exposure to the upside. I'm not going to get caught sleeping on that. But I also don't want to get burned, not by only focusing on the bounce and then missing some of the downside or spending too much money on short-term bounce plays and not getting what we need to. So those are the plays. Everything else I'm looking for, I'm still holding those Johnson & Johnsons. We ghetto spreaded those, so I'm keeping those. We have the Intel. I already ghetto spreaded those. And what I'm looking at them for is, they close green. Watch the laggers and watch the companies that haven't dropped. So post them if you see them. Another big lagger that I like. Oh, we also added another Netflix too, because Netflix is one of those, but Google, I've been saying this the last few days, Google is really, really lagging because here are those October levels. The markets already came down there. They could pretty much drop another $100, $200, but the spreads are crazy. You're going to have to spend $500, $600. However, I might be interested in that. So I am going to be eyeing Google tomorrow morning. Same thing even with Apple. Apple is still very, very resilient here. So if there is going to be one of these tier 3 level drops in any sort of panic, Apple would be good, but I have that short position already. But I'm going to look for cheap plays. I did sell one of my Apples that expire next week. We got 1,000% on it, so I took that. Then Microsoft as well. So a lot of tech names pretty much are still holding up. These are some of the laggers. However, they have dropped a lot and the contracts are expensive, which makes me a little bit worried still. But keep that in mind if you have any, post them. But like I said, Netflix here, this is another one of those laggers. Take a look at all those tech stocks. They haven't dropped yet. So people might stay inside and watch them more. That still doesn't necessarily protect them to other risks of overall broader market sell-off. So I grabbed a April 17th 205 put. We already had the 220s, and then I ghetto spreaded those as well. I ghetto spreaded the 220s, and then we have a non-ghetto spreaded 205, but I bought it at $65. So again, still trying to keep it small. Didn't go too big yet. Clorox went smaller, Netflix went smaller, bigger on the SPY calls, and then bigger on the 3Ms. But with as much time I'm getting on all these plays, I have time to maneuver, so keep that in mind. Don't get caught being too short-sighted, baby. So watch all those. Watch HYG. Remember, we made those plays free. I haven't ghetto spreaded HYG or TLT. Anything with the bonds, I'm kind of holding there. Watch Facebook. They could kind of be a lagger to a degree, but remember now, they had bad earnings, and being, as involved as I am in Facebook, I know this is starting to get to a crucial level. If they start to break this 170, even 160, I mean, it's not going to be a pretty ride for them. So watch out for Facebook. Again, all of tech in general is at a weird place, but another ode to the laggers and leaders. Some of these value stocks now. Here's AT&T. Any of these dividend stocks, these ones don't really move, but they could start to come down here. And these could also be great pickups to have, but watch out for AT&T. Even now, IRM. This is what I'm saying, because now if we start getting into an area where things really start to sell off, I want the laggers and the stocks that aren't designed to move much because they will still fall victim to this. Same thing. We already have the McDonald's holding those plays up 1,000%, keeping my eye out for them. Haven't got the HD, so I want those. And then also I'm going to be looking at banks as well too. And another one, they're going to be more expensive, but I like them. They're travel, and they had earnings that made them go up here, booking. So they'll be more expensive. Them and Google will probably be the more expensive plays we're going to be eyeing for tomorrow. So watch out for them. And then finally, TLT. I can't wait to see what this does. This is going to be a smaller play, but TLT is setting up to play how the Fed reaction comes in, and that's going to be the next wave. You guys have to see how does the market respond now to more news, more just panic, not even in when I say panic, it's even not in a financial sense. I want to see if that translates over to financial into the stock market. But now also, what is the response from once we get the kitchen sink thrown, or once we get a signal of stability? How does the market react? That's why bonds and what happens at the Fed meeting, and then policy change from there. Again, policy, that is going to be the key we need to watch. So watch those. And then finally, if we're going to be riding the wave, if we're going to be patient and not forcing stuff, if there is an opportunity and there's opportunity for big moves, don't forget SPX. I brought that up to you guys last week. There was multiple plays that went $40 to about $4 to $10 grand each off of $40. It was crazy. So keep that in mind. But remember, SPX is crack, heroin, whatever you want to call it. Don't go too crazy with any of these plays. Like I'm telling you guys, you don't want to spend money now, whether you think it's small or not, but then you could have put that same $40, $50, got in time and still been right in the middle of all this opportunities. But instead, you got greedy, wanting more front-end gains versus back-end gains. Just be careful. You got to go small on this. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. It's free 99, baby. I need your head in the game. You need to stand there, be solid, do not panic. I told you, this is your midterm. This is even going to get close to the final. You guys have to react and react accordingly. Remember, it's better to be late than wrong. Get time, control the budget, snap out of it. Boom, you're free, baby. I don't care if you made money or lost money. Do not bring that into this next week. We need a clear mind. I'm going to get a play. Who cares? You're going to get it this week. Oh, I have all this money. No, doesn't matter. But again, we're seeing both, and this is why this week is going to be so important, because of the shift that it's going to bring about, both mentally and financially. So I'm excited. I hope you guys are ready. I hope you're ready to strike. Shout out all the people. I love you guys. I appreciate you, and I'm going to see you there in the morning. Let's go.